Earlier this month, Palantir reported their first quarter 2023 earnings that were better than Wall Street expected, and they also raised their guidance, their outlook for the year. In turn, Wall Street rewarded Palantir stock and Palantir management and shareholders with a 50% plus price increase so far in May. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. In this video, I'm going to break down really three key components. What I'm looking at in terms of Palantir's earnings, the key points that I'm looking at, a lot of favorable data points. The second key aspect is why I think Palantir has a potential to be an AI winner, talking about the prospects and why this is a huge opportunity for them. But the third component is thinking about where does Palantir stock potentially go from here? Because you can always have great companies, but you need to partner it with an attractive valuation in order to have really compelling returns. So we're going to talk about all three of those components in this video. If you enjoy educational investment videos, please make a point of hitting that subscribe button. So let's understand, well, what's going on with Palantir's results. So first of all, this is their second quarter where they reported GAAP profitability. It's very minor. It's only, 1 penny a share. The first quarter, that they did that was last quarter, and it was really a one-time gain that they had. But they are trying to say, hey, look, we are being serious about profitability. They also, this is their first quarter with operating profitability. So not just a one-time gain, their underlying business results were actually, based on generally accepted accounting principles, were profitable, and they are still posting significant free cash flow. The cash flow, I'm a little bit more mixed on, because a significant percentage of that is coming from stock-based compensation. So the way to think about this company, whenever you have a company with a lot of stock-based compensation, at least personally, is, well, that does generate real cash flow for them. So you shouldn't just draconian, assumption, just remove that stock-based compensation. I think the real adjustment is to say, hey, your diluted growth per share is going to be lower because you have so much stock-based compensation. So it is important to recognize they do have significant free cash flow. They will be able to self-finance their growth, but their reported growth is going to be lower than their nominal growth. They might say, hey, we're growing at 18%, but the reality is on a per share basis, it's much lower. Now, looking at the fundamentals, their revenue growth of 18% is reasonable. On a per share basis, it's much, much lower because, once again, there's a lot of dilution going on. You see net dollar retention of 111%. So that means a lot of customers are sticking around and paying more over time. And what I like to see is that they're constantly growing their customer base. You see a 40% growth in customer base, over this past year. This means they're not only, this means, first of all, when you see revenue growth of 18% versus a customer base of 40% growth, this means you're trying on a lot of smaller customers that might just be, doing a trial amount, doing a small amount. And this could lead to faster growth in the future as these trial customers, if they say, hey, I really like this solution, I might want to spend more on this platform. But the development that really got Wall Street excited is their announcements regarding AI. And they said, look, we're introducing these two new platforms. You have artificial intelligence platform for business, and you have artificial intelligence platform for defense. A lot of folks may have noticed that artificial intelligence stocks have been going bananas over the last few quarters, partly because of OpenAI's, ChatGPT. There's a lot of exciting stuff going on there. I myself will have some exciting announcements on this channel later this month. But what Palantir had to share in terms of artificial intelligence and why it's potentially a big opportunity for them is that they're effectively taking these large language models like ChatGPT, and they're saying, look, ChatGPT, this was trained on all this public data, but all these companies, they have very private data, and we've been working with these companies to manage this exclusive data. So now you can take this really smart language model and overlay it with all this private data. So that way people anywhere in the company, whether or not you are the CEO or you're a very junior role, you can now interact with the data, if the permissions are set up as such, to really start asking questions and effectively having a super smart analyst there process it, analyze that data that you have on an exclusive basis. That's this private data. And that is a huge opportunity because most data that's really valuable is this private stuff that OpenAI, Google, it doesn't have access to. It's this private data that individual companies have. Think these defense companies. Think companies that have some sort of proprietary information. They have a lot of stuff that's not floating around, that OpenAI has integrated into their language model. And so this is going to be stuff to either train new models or to take the existing models and to work with it in terms of analyzing. And so this is a big opportunity for them. They talked about one example with a major insurance company, how they pre-released their artificial intelligence platform for this insurance company. And within a few days, built a collaborative AI agent to automate claims processing. The chief data officer at this major insurance company said that this platform was years ahead of anything they had seen. They talk about the pace of innovation around AI and large language models presents a unique opportunity for leveraging the infrastructure that they have built and offer for businesses and the defense industry and Western governments alike. I agree with a lot that they're saying here. You're going to create some really smart models that can do very cool operations for businesses. An example of an insurance company having something that does claims processing. You're going to now have this software layer that's in part powered by Palantir. Palantir saying, hey, we're going to help you connect all this private data with a large language model like OpenAI's ChatGPT, but there will be other language models in the future, and they're going to help them pick, hey, which language model do you want to use? And we're going to create these artificial intelligence that can do huge roles, save potentially huge amounts of money for businesses. For example, automating claims processing. Where you automate that, that's potentially a lot of roles, potentially a lot of costs that you might be able to pull out of the business over time, where you say, hey, I don't need to have 10 people review this claim. The AI can quickly say yes or no, thumbs up, thumbs down. So that's a big deal that you're going to see spread across, dozens of sectors, really across the entire economy, I think, over time. So I do think, this is a big deal in terms of Palantir working with the private data for companies and integrating these large language models. And, Alex Karp had more to say about this, saying, look, in the last 20 years, there's never been a development like this. I'm in agreement with what he's saying here. I think, what we're seeing with OpenAI's ChatGPT is akin to a new industrial revolution. And he's talking about we're one of the best positioned companies in the world to help these companies with this private data that we've helped them, manage, structure, and integrating it with this large language model. And he's saying the demand for which is nothing I've ever seen in 20 years of being involved in Palantir. It's unclear how much of this is typical Alex Karp hype versus the actual demand. I suspect he is truly seeing tremendous amounts of demand from businesses. The question is, will this translate into much greater growth for Palantir, let's say in the quarters ahead? He's looking at it saying, look, based on what we're seeing, we're going to raise our outlook for the year. And this is another reason why Palantir stock, I think, did so well so far in May, up over 50%, is because they're not only talking about just tremendous growth for AI, but they're also raising their outlook. They're saying, yeah, for full year 2023, we're raising our revenue guidance to around $2.2 billion. So this is high teens revenue growth. And they're saying, look, we expect to be profitable each quarter of this year. So they're fundamentally switching to a profitable business, they're self-financing, and they're raising their outlook. And by the way, this is one of the biggest opportunities that they've ever seen. So the question is, where does Palantir stock go from here? First of all, in full disclosure, this is not financial advice. And I recently started buying a stock that I think has over 300% upside that I called out to my subscribers at unrivaledinvesting.com. We also offer educational videos and exclusive Discord server available for annual subscribers. Once again, that's unrivaledinvesting.com. As I think about Palantir stock, currently around $12. The reality is shareholders have been on a very bumpy ride because originally, it went public around $10. So it's not like, it went up significantly, went down significantly. It's been a very bumpy ride. And the truth is the return hasn't been that compelling if you bought in at the original $10 or even at a significant premium. A lot of people are actually underwater significantly. Part of the reason why is despite how attractive and how promising this business is, you have valuation versus, fundamentals. And you have to say, well, wait a second, do these two both weigh in a very compelling way? Do you have compelling fundamentals and compelling valuation, or do you have, interesting fundamentals and ugly valuation? And I'd argue when I look at Palantir, it's largely that case. And I think you're really looking at a situation that from a fundamentals versus valuation perspective, it really isn't super compelling. That's what I think when I look at this. I think there are a lot of better plays out there when I'm thinking about risk reward, because I'm looking at Palantir and I'm giving them full benefit of the doubt, assuming around 2.2 billion in revenue for the year. I'm assuming that they get the equivalent of 20 to 25% profit margins. Keep in mind their profit margins are now around 1%. So I'm giving them full credit here for where their profit margins hypothetically could be in the future. And once again, this is a hypothetical framework. Of course, the stock price can go way higher, way lower. I'm saying over the next 5 years, maybe in the high case, they're growing at a low 20%. And then in 5 years from now, it's valued at 25 times earnings. In that scenario, with 25% profit margins, low 20% growth, which is faster than where they're currently growing, which is closer to 18%. And a 25 times multiple 5 years from now, you're only talking about 15% upside. So once again, this is part of the reason why I just don't think the price, even though the AI opportunity looks so compelling, and even though their fundamentals are inflecting in the right direction, you are seeing that growth, you are starting to see that profitability, I think the valuation has just gotten ahead of itself. And it's still just never really got to that dirt cheap value. And you're going to be, this is the part that causes so many investors to have so much problems, is they see a stock go up 50% and they think, oh, this is either the beginning of a new bull market, or they think, oh, I missed it. And the reality is you sometimes have things trade range bound for years at a time, particularly when you have something that's very expensive, even if the fundamentals will prove themselves over time, which it may happen with Palantir. They might prove themselves with 20% growth over time. If they do that, it still could be a treacherous journey with, maybe you just have these dramatic swings over time. I personally want to find the things that have the fundamental growth, but also have the low valuation. So that way I don't have to worry about, oh, could this just be range bound for years and years, because it's starting at such a rich valuation. If I buy something closer to a fair or a low valuation, then I'm saying, well, at this low valuation, maybe management can, buy back a lot of stock, or really is the stock price going to go much lower? Let's look at Palantir once again. Palantir trades at over 10 times sales. That is a very rich multiple. If you were to assume that they were currently at 20 to 25% profit margins, which they're nowhere near, then it would be trading around 60 times earnings for a company growing at 20%. By no means is that in a type of attractive multiple. Peter Lynch, I have a copy of his book over my shoulder. He liked to call out the companies trading at, under 1 times PEG ratio. So that's PE to growth. So if you had, let's say, 30% growth, it would trade at under 30 times earnings. And so this is the exact opposite when you're looking at Palantir. You're saying, oh, this is growing at 20% and it's trading at the equivalent of even 60 times earnings, assuming that they get to profit margins that they're nowhere near. So I look at this and there's still a lot of execution. It would not surprise me to see Palantir range bound for years to come, where you get these dramatic rallies up, but then over time it painfully works its way back down to the single digits. That would be my personal expectation. Could you see it absolutely go bananas? Well, absolutely. You always get, crazy momentum in some cases where people go, oh, the AI hype train, this is going to be great. I think AI is going to be dramatic over time, but it's important. Once again, it's always important to marry fundamentals with valuation. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.